on. Okay, guys, good morning to all of you. Welcome to my morning MAO. All right, now this MAO is going to be a bit longer because there's some fundamental stuff that I need to cover and of course some technical stuff that I need to remind you guys. So today's MAO will be very, very important. It'll last about an hour and 15 minutes. So guys, let's start, okay? Okay, let's do it, huh? So let me just share my screen right now. There we go. 24th of March, Wednesday today. Yes, indeed. Now, yesterday we did a very, very good Super Tuesday sharing, and I basically impart the skill of pivots. I introduced to you what are pivots, how I created it in a very mystical way, and also how powerful it is if you actually use it in the right manner. All right, so if you missed that Super Tuesday sharing, right, please do a part by going into our revision group, and then after that, watch it. Okay, I already written down the key highlights, so watch it. It's going to be very, very important for you. Okay, now is the market giving ample warnings, or we got it all wrong? Okay, so again and again, people is asking me, Cal, fundamentally the market is terrible. COVID-19 is still ongoing, but the thing is the stock market is still going up, right? So is it that we got it wrong totally? Is the Dow going to 33,000, 35,000, 36,000, or really is this just the prelude or the warnings that is giving to the people to stand by for a bigger wave to come down, to come to the market? So of course, there's always two sides of the coin. So today I will explain to you some of the key concerns that I have to inform you what can we look out for so that we can actually capture this potential run. Okay, let's just start. Okay, so the thing is this, and Europe, as I mentioned to you, is really coming in. Apparently France, Germany, UK especially, they are having a lot of problem. But the main thing is that you don't see that much. The coverage itself is pretty low, okay? But the numbers are growing steadily, right? Growing steadily. So will Europe be the catalyst this round? Now we had the first time was in China, Wuhan. Then after that, it went to USA, all right? And then of course it spread around the whole world. Now UK, so-called Europe was there, basically is just around there in terms of numbers, but it wasn't really, amplifying as crazy as what happened in USA. But now USA, the numbers are coming down apparently, but the Europe numbers are going up. So if Europe got hit by this, would that cause a big problem across the whole global market, right? Well, to me itself, it's actually very, very possible. And that's why I want you guys to pay attention to some details so that we can look forward to do it better and make some money out of this market, okay? Now, before we start this morning session, as I said yesterday, 23rd of March is a very important day to all Singaporean. All right, you should know what is that day, right? Of course, yesterday my MAO material were already all prepared, so I couldn't, really do anything to salute this guy, okay? But since that someone brought it up, and I like this quote, I'm going to quote this for all of you guys, is that you begin your journey not knowing where it will take you, okay? You have plans, you have dreams, but every now and again, you have to take uncharted roads, face impassable mountains, cross treacherous rivers, be blocked by landslides and earthquakes. That's the way my life has been. All right, I think this one really, really touched me very deep. I mean, of course, I am nowhere near him, but definitely in terms of what he went through in his personal life, I read his book. I really salute him for what he has done for us in Singapore, and also the thing that he actually have went through was really incredible. And I really, really like this particular segment. And this is the one that when he basically came in to talk against when there's this SIA strikes. I want you to watch this again for 1 minute. I think we should really watch this again, okay? A good reminder.
See me and see whether I'm still vigorous, able to campaign and take them on, whether it's worth taking me on. And I offer them two choices. Either you argue, you stop this intimidation, which is what it was, bringing SIA right down, disrupting services, ruining its reputation, millions of dollars worth of advertisements and sales a matter of 2 weeks, I gave them a choice. Continue this, and I will, by every means at my disposal, teach you and get the people of Singapore, help me teach you a lesson you won't forget. And I'm prepared to start all over again. Or stop it. Get back to work, restore discipline, then argue your case.
All right, so I think that this is a very, very powerful speech by late Mr. Lee Kuan Yew. All right, I think this really tells me that sometime in life you cannot allow intimidation to come into your life. All right, sometimes itself we can be wrong, but if people step over the boundary itself, right, you have to stand for yourself. And I think that right over the years, personally myself has been stamped by many competitors, and I think that the time is about there. So that's why the thing is that in my personal opinion itself is that right, I think this is really a very important statement to let everyone know that right, you may face adversity in your life, adversary in your life, but end of the day you must understand that as long you stand firm, you stand strong, you have a will to succeed, right, I believe things can be done. And for myself as well, right, I think I will be doing that from next week onwards. So you will see a lot of little insights coming out from me. And of course, that is whereby I will need all your support. All right, guys. So this is where, yesterday, 23rd of March was a very important day. And if you don't know what happened, then just key 23rd of March, Lee Kuan Yew, you will know what I mean. All right. Okay. Right, so disclaimer as usual, once again, please make sure that you check your current financial condition before you enter any trades and using any of my sharing as reference. End of the day is that I'm not liable for all your winning or even your losses. All right, so please take note of that. Now, I know that you guys probably is fed up with all my advertisement telling you about our current ongoing promotion of our cryptocurrency workshop. Now, the thing is this, why I say that this is going to be very big for all of us, because we are going to invite, now it's Singapore level, and very soon we'll invite other countries to join into this. This is what's called international workshop. So what we want to try and do is that we want to open this thing to more and more people. And of course, we need more of you seniors to come on board and help. All right, and create a new history altogether. But of course, you may want to ask is that now, what is the in thing for you guys is all right, other than participating in this? You must understand that now the race to digital currency is really going up. You see that there's so many countries now all going into digital currency, whether you like it or not, it's entering the market. And of course, some countries are coming in with bigger one. And of course, this is China plotting a digital yuan in major cities with the goal of wider distribution in 2022. All right, so which means that right, this cryptocurrency is here to stay. It's really here to stay. You cannot, you can hide all you want, but fiat currency will slowly move out of this our daily life. And by mid 2025, is that right? We probably is not going to hold any cash on our hand. That's the reason why now our local banks basically is that right, shutting down branches, tellers. They just want you to go online and pay online, because that is where the digital money really is. So guys, if you really think that this is the time to move on, okay, do it. For those who are still procrastinating, thinking that is it really for real, I'm telling you this is for real. It's meant to stay. All right, so this workshop that we're not only going to talk about Bitcoin trading, Ethereum trading, we talk about more on basically a surface talk on what is cryptocurrency, and we really want you guys to really understand the importance of moving forward towards the new paradigm. Okay, so guys, we have already have 60 people have signed up. Right, we have a limit. By once we hit 100, we have to stop. Okay, this is the following rule of social distancing. All right, so guys, do contact us. Okay, it's on the 27th of March and the 3rd of April. 3 of us will be talking on the first day, 27th of March. The second day, which is the same session as well, right? Yao Dong will not be there because he has his work schedule. But Winston and myself will definitely be sharing a lot of good stuff with you guys, and we'll make sure that you understand how to utilize and to trade, the cryptocurrency. Okay, to trade. The word is to trade. To invest as well, right? That is on another part of it, which we'll cover in our e-learning portal. Okay, all right, thank you. So to register, just go to tradewiththeboys.online. I repeat, go to tradewiththeboys.online. That is where you can register for the event. Okay, all right, so the thing is this, so North Korea, wow, North Korea fires the first missile test since Biden took office. Seriously, we know that, okay, during the period of Donald Trump, initially there was a lot of bickering online between Donald Trump and North Korea, but never once North Korea fired any missile during the 4 years era with Donald Trump. But apparently once Biden took office, straight away, North Korea resumed its missile test over the weekend, which is the first to occur under the Biden administration. So apparently people say that is he alive? No, he is very well alive. You can see that. Put on some weight further. And of course, this is back the good time when Donald Trump basically went to North Korea. That was a very, very powerful move. Now, I think it is, as much as I don't really like Donald Trump as president, but I cannot deny the fact that he never created any war during his 4 years era. So this is something that is really commendable, and that's why the soldiers in America really likes him a lot. Okay, the soldiers really like him a lot. So under Kim Jong-un itself, right, they have already fired the first missile. And since 2011, actually, Kim has fired 100 missiles and conducted 4 nuclear tests, okay? But that is all prior before Donald Trump period, all right? Apparently, Donald Trump period, he didn't do any much of this. And that's why the joke now is on Biden. So I can give you a little joke here, okay, just for the fun of it. Let's look at this joke, okay? Hello, Mr. Kim. I'm really glad you called me. I wanted, you suck. Bring back Orange Man with his hot wife. Look, Fats, we have newts. We have stairs. All right, if you don't know what is this joke all about, it's about just recently when this Biden went up to Air Force One, the plane that for all the US president, he actually fell off the stairs, he tripped over the stairs 3 times, okay? I mean, anyone can trip on the staircase, but it's just like because it's him and his age itself, right? It got a bit of worrying, and of course, this is just a parody. It's just a joke here itself. So end of the day is that people are just making fun of it and say, look, you try to be funny, we can be funnier with you. All right. So that is why I believe that Kim Jong-un is telling the US that, hey, don't play with me. Okay. We are here. We were supposed to be friends, but things have changed. So of course we have to be careful on both sides. Now the JPY, I call it a JPY, the dollar yen combo, right? Is Jerome Powell and Yellen combo, right? Yesterday, Jerome Powell and Yellen agrees valuation in the market may be high. Yes, I watched the what they call they basically chaired a meeting, and of course I watched what they say. It was very clear that they were like, okay, agree that the current price of the market now is really a bit high, but it's not that worry of stability. So what it's trying to say is this, look, okay, even the Federal Reserve now is telling you guys that the valuation of the market right now is a bit steep. And of course, if that is out, right, as long as it's going to be like if a correctional move of 5 to 10% is really acceptable. So that is my point that I want to warn you guys is that yesterday when this Jerome Powell and Yellen says this, it's already a very inclination to tell you that just to prepare yourself. Okay. And of course, Jerome Powell says that they had not begun talking about tapering, so no worry. But if they're going to taper, they will definitely let you know. So that's why it says that, right, now with the current asset valuation and the history metrics, all right, we should be able to go back on track, according to Yellen, okay? And of course, end of day is this, Jerome Powell repeated himself that said that where there's any shift from the accommodative policies, which is the monetary policy, if there's going to be any shift, he will let people know in advance. But of course, by the time he let people know it's all right, the market will already have shaken. And that's whereby I want to tell you this, is that the boys definitely have a good access to all this information much earlier than us. So if the boys are showing signs that they are actually liquefying their position, it's just a matter of time itself, right? Probably Federal Reserve is about to inform us. So that's the reason why I keep on reiterating this point, is that traders, you need to be watchful the next 2-3 months, because things can get a little bit dicey from now onwards, okay? So of course, Yellen at one of the her speech itself, right, said this: tax changes will help to pay for infrastructure. So which means that is there a possibility that there will be taxation on the rich people? Well, it seems to be possible, all right, because Democrats work in this manner. But the thing is that if that happens, what will happen to the stock market, right? So of course there'll be some profit taking coming in. So that is why, again, I need to inform you that the 2 most influential people on earth is telling you that, right, they know the price is high, so definitely to chase now probably will take a little bit of risk. Okay, got it? Now, Jim Cramer is all right. I really lost idea. I mean, seriously, he flipped his position or ideas, keep on flipping until I lost track already. I don't know whether he's long or short now. So yesterday, Jim Cramer came in and said that the market won't bottom, okay, won't bottom under another crescendo moment. Okay, so what I'm trying to say is that the market now is probably at a high, and the market will not go up higher unless there's a sell off in the market, right? Crescendo, right? So apparently it's all right. He mentioned that the Nasdaq is down by 6.7% from the February high. The Dow came off a little bit. And he says that, right, when the market start to sell, reach a climax, okay, and then after that, the market will go into a sideways movement, and that is the time you can go in to buy. So he basically is saying that, right, just suggesting that we are heading for another potential selling, though less severe than last year meltdown. Now, is this a warning sign from Jim Cramer, or is it a warning to tell you that, hey, don't believe in Jim Cramer, just keep on buying, things like that, okay? It's up to you to make your final decision. So he mentioned that it's when the tsunami of selling wipe out the weak hands and the market bottom, that is where the symphony itself, right, basically will tell us that it's time to look for the other side. So now the thing is why everybody's talking about it, because the stock market, as you know, has basically bottomed out on the 23rd of March last year. All right, 23rd of March was the lowest level, and then after that, the Dow Jones, the S&P, the Nasdaq recovers all the way to today's price, and that is why everybody was thinking out loud itself, right? Is it that 1 year later the market will take profit, or is it 1 year later the market will continue to go higher? So that's why Jim Cramer gave a bird's eye view of the market, and he's keep on stressing that, right? You want to have a bottom, you must have a sell down of some amplitude first, and then after that, then the market will base out. Okay, so that's what Jim Cramer says. But of course, my favorite analyst on CNBC, Tom Lee, has another view. Now, Tom Lee says that the cyclical companies are the new growth stocks during the COVID recovery, and he sees that there's more room for cyclical stock to run higher as the US economy recovers from the corona pandemic. All right. So basically, he is very positive. He's very bullish. Right. He didn't touch on that on the tech share, so it means that tech share probably just to move away. But the cyclical counters is to look into for buying. All right. So the way he's trying to say is that anytime when the market pull back, right, for cyclical counters, it will be a good time to buy into the market. So we have basically Yellen and Powell. We have Jim Cramer. We have Tom Lee. So what's your take here itself? So let me hear you guys. If you think that it's still good to buy, please key the word buy, B-U-Y. If you think that it's time to sell, please key S-E-L-L, sell. All right, that means that you're taking the buy, you will take the buy position as and when the market come back down, you will buy, or would you, every time the market go higher, you will sell? Let me know now your answer right now on the Facebook group chat. Let me see while I take some water. So I'm waiting for you guys to key your answer. Now for Facebook, right, whenever I receive the updates, it's a bit slow. Yeah, so that's why I want you guys to, text me ASAP. So Leong say sell, buy when dips, say you may. Richard say sell. Fred say buy on dips. Susan say sell. Judy say sell. Anyone else? All right, anybody else? Well, if you're driving, don't do this. Just focus on the road, okay? Please focus on the road. No, you don't get yourself into trouble, okay? All right. Philip says sell, and Anthony say follow TWB. Oh, all right, just justify that. All right, thank you so much for your participation. All right, Edmund says sell. Okay. Now, the thing is this for Europe woes continue as Europe third COVID-19 wave, okay, could hit Britain. Now, honestly, I lost track how many waves have hit the world. I mean, I know it's about 3 or 4 now, but, end of the day is this. Eileen says sell, okay. Right, this Prime Minister Boris Johnson warned that the third wave of COVID-19 infection sweeping across Europe could be heading towards Britain. And that is a very worry problem, okay. It's a very, very, very problem, okay. Indeed itself, right? He is fearing, and I think it's a very, very important thing was he is standing up and tell the whole world that we are waiting for this and we know that it will come. And of course, you can see now in mainstream media, apparently all shows that, right, there's a potential of lockdown that's going to happen. And obviously, it's all right, this is going to be a big, big problem, okay? So will this be the catalyst that bring up down the market again? Is it because the now market is 1 year up already? It's basically way above valuation. Is it a good time to take profit off the table? This is what we are talking about today. All right, that is where you make your own decision. Okay, like Jennifer, you say the short-term sell, long-term hold. All right. So again, everybody got their own view here. I'm not going to say who's right, who's wrong. So I'm going to show you what Norman trader Steve Henrich did a chart, which I think is pretty interesting. Okay, let me explain to you how he did this chart. Okay, in a minute. Okay, so what he uses this thing called PPO indicator. Now this PPO indicator, not many chartists use that. So this is the percentage price oscillator, which is a technical momentum indicator that shows the relationship between the two moving average in percentage term. All right, so basically use two moving average itself, and then the distance between them will basically arrive with this number. So basically, right, it compare asset performance and volatility, spot divergence that could lead to price reversal, generate trade signals, and so forth. So in short itself, right, basically this is his variables. His variables. Sorry, this is not the one. Okay, here, this is the variables. And you can see that, all right, the last time during the 2008, it's not the recent move down. It's 2008 during the Lehman crisis. The PPO indicator hit a high of 30.27. And then after that, it's a monthly chart, by the way. I do know it's a monthly chart. Then after that, it's all right. The market basically went down 1, 2, 3, 4, 5. After that, 5 months of consolidating, 5 months. And then after that, when the market broke the moving average, which is I think it's a MA10 versus monthly chart, the market came down now, of course. Okay, so now if you are a pattern trader, if history were to repeat itself, you realize that it did not have the same thing until right now. Apparently now in 2021, that is more than 13 years ago. Okay, apparently now, right, the number that we are seeing now is 40.68, way higher than what we saw in 2008. Okay, and the way the market has been moving up is the same way. It's a parabolic of 45 degrees. Can you see that? It's a very clear 45 degrees parabolic. And of course, it's all right. It seems that now with Yellen, J.Powell, all these people are telling you that, right, a valuation a little bit steep right now, right? Would this means that will we see actually a pretty 5% or 10% pullback? So that is what this chart is all about. But again, I will stress this once again, end of the day, you have to make your own decision. I'm not here to tell you what to do. We are here to just follow a system, but at least you know that warning signs. And of course, if history can tell you patterns, this is something to watch out for. Okay, so whether it's a warning or it's misunderstood, I will let you decide for yourself. Okay, all right, cool. But of course, to be a responsible trainer and a coach, I also did some research for you on your behalf, and this is my own research. Now take a look right here. This is our own TWB chart. Okay, this is our own TWB chart. Let me explain this to you. Now you can see that the market bottomed out just indeed on the 23rd of March. Okay, that was back in the last year only. All right. And then after that, you can see the market has been surging higher. Now, using my TSCB indicator, all right, TSCB, basically, right, the last time we see a good indication was here. And after that, it's all right. You can see the market is way above the CB point. The CB point apparently is at 20,534. So to put it simple, right, from point A onwards, right, on hindsight, since A back in 2020, November, from November 2020 until now, right, actually what it meant that as long as the market stays above the TSCB, every CCRY will be a buy. And if you look carefully, it's all right. It seems to be any time and every time when the market basically create a CCRY, it will be a buy. So what is happening now? We are seeing the R's happening. So if the next time we see another CCRY, it could be a good time to buy into the market. All right. So this is the first thing you must take note of that. The second thing that is a bit concerning is that I look at the way my indicator called KRW. Now, KRW is only for PTP student. It stands for Cal Reversal Warning Indicator. Now, this is basically using the daily KTR to basically do the divergence indication. So what we are seeing right now, you can see back then when the market was surging, okay, you can see that it was going up. That is what's happening right now. Then after that, there was some downside movement, and that basically, right, if you notice this, when it was happening here, the market was flat. So this time around, the market is also a bit flat at this moment, okay, a bit of flatness at the moment. The thing is, it only got really, really bad when the KSI turned to red. When it turned to red color, that is where it goes into a selling mode. But before that, it's all right. The KSI were one individual like us. Okay, so now the thing is this: the KSI on our chart is still green in color. Okay, so all looks okay. But the only thing that is a little bit worrying is the market has turned red color. So all I can say is that, right, with all the thing this morning I have been saying, traders, just be careful. If any time the market really have the KSI turning red, then of course there will be a bit of problem. And the KRW also turn red, then of course there may be some selling coming in. So I'm giving you ample notice first, just in case things happen. But of course I said already, but after when the market pull back, right, if the market flip again from red to yellow, to create a CCRY, then it could be a buying opportunity again. So traders, this is a very important warning in advance. So I want you guys to take note of this, and I really hope you guys can profit out of it. Okay. So I will be updating this regularly as and when I see any shift, any movement, I will inform you guys. And of course, I hope that you guys will be able to benefit out of it. Okay. All right. So this is a very, very important sharing today. Okay. All right. Okay, so let's just go through what happened last night in the US stock market. Now, yesterday, US stock market was really boring. For almost 4 hours, it was just hovering at the OP level. So it was absolutely very, very boring. And basically, the market was going sideways. It was not going anywhere. And then when J.Powell and Yellen started to speak, right, and that was where the market got a hint of it, bang, the market sold down for about 300 points. Okay, so that was what happened yesterday during the wee hours. Okay, so what happened is, oops, sorry, my animation wasn't there. Okay, so basically, right, the Dow closed 300 points lower because Caterpillar leads the downside. Now, Caterpillar was the one that the market brought up recently because of these cyclical counters. And again, the one that brought it up is the one that brought it down. Okay, so what happened is that Caterpillar dropped 3.4%. Because they were worried there's any hiccup of the global economic reopening. Now, of course, Caterpillar is a very important indication. If Caterpillar shares goes down, right, meaning people are getting restless or they got confident with the global economy, and obviously Caterpillar will come down very fast if this thing really, really happen in Europe. All right. So for the Nasdaq counters, right, they also took some profit. But the main thing is that shares from the airlines like Norwegian Cruise Airline, Carnival, and airline stocks like American Airlines and United Airlines all lost quite a bit, 6% to 7%. That's quite a lot, right? And I already warn you guys, don't chase after it. I already warn you guys, don't chase after these airline shares. The last 3 days is all right. A lot of people ask me on the side, Cal, can we chase airline shares? I say, my friend, seriously, why? Because they say that because the news are saying that there are a lot of booking online and stuff. I say, yeah, booking online, but have you saw that booking can be cancelled? It can be pushed back. I say, don't worry, wait for a while. But of course, it's difficult when people, have different opinion. Right, it'd be hard to let them see reality. So that's why this morning is all right. When I saw the price come down, I know quite a few people have texted me and say, what should they do? And I always remind them, you should know what's your stop loss. Okay. So this is the 1 year anniversary of the bull market. On the 20th of March, that was where the market bottomed out. And then after that, from the high to low, the market lost 34%. Now, this is something a good reminder for all of you. So I'm going to just remind you this you may use it in next time. Okay. So when our market hit the all-time high back in 19 February 2020, all-time high, right? You will notice that, right, at that moment when it hit all-time high level, right, the market has entered the bear market, okay, territory. Okay, why do I say that? It's all right, the market came down. So obviously there's a first 5%, there is a 10%, there's 15%, there's 20%, and 30%, and so forth, right? Yeah, so you can see that every time the market hit the next 5%, the market actually do a temporary recovery. Now, so based on these numbers here, it's all right. When it hit 34%, 34 is very near to 35. So when it's going in any range of 5s, you should look out for potential buy, especially after the 30% mark. Okay, because basically based on all the bear market, right? Every time you sell, the market lose more than 30% or more. Every next 5% will be a very good time to buy, because even the worst it is back in 2008, it went down to the low of 54%, and then that was where the market bottomed out. All right, so this is something very important. And of course, by the time August 18, or just 6 days after my birthday, the market already crossed the previous high. Okay, so after that, we all know the market go further up, right? This S&P 500. So what this chart tell us is that, right, within 1 year, we from the bear market to a bull market and a bull market to a new high market. Well, all this, is it because the economy is doing well, everybody is making more money, or because some other reason? So that's why traders, you should be, be more careful at this period of time. All right, so Jerome Powell have already said that when it's time to dial back its multi-billion-dollar purchase, the central bank will communicate carefully and inform the market, okay? So I repeat, when it comes, we will communicate well in advance of time of actual tapering. Now, I can tell you this as a personal friend, okay? Over the years, I've been monitoring how this Federal Reserve chief do it. I can tell you, they will tell you. In fact, it will tell you, but by the time they tell you, right, it's at a very low end already. Because their friends will probably have get the first information and they have done something. So I'm going to inform you this thing is, right, write it down somewhere, is that when you see the Dow Jones start to sell with huge volume and the market don't even cover on it, that is usually the starting point. All right, which means that you see heavy volume in the selling of blue chips, but the market just tell you conveniently or just taking profit or all this crap, right? We've already explaining to you where the big volume coming from. That is usually the problem. So at the moment now, I yet to see that. So it's still all right at the moment. But if you actually see that happening, traders, you must really take the other side. Okay, got it? All right, important, huh? So basically, it's all right. The bull market, right? This is the reason why I say that the bull is still probably intact now. Is because usually a new bull market like this one, you'll carry a second stronger rally the next year. So last year was a strong bull. So this year, 2021, should be another bull market based on statistics, right? And the Wall Street consensus, they're all looking at a pretty high level. As a matter of fact, right, S&P 500 now is trading at 3913. Now the S&P now is trading at 3913. So 3913 is the current price of the S&P 500 level, but they are looking at 40099. So which means that there's a lot of upside to go according to the analysts, okay, the top 15 strategies, okay. So the high one is basically from JP Morgan Chase. They're looking at 4,400, but most of them is looking at 38, which is a bit the lower end right now. So, but the average itself is 4,099, and medium target is about 4,001. Okay, so I'm going to show you the full picture of this. Now, this is the full picture of all the top 15 analysts. So for Merrill Lynch, it's looking at 3,008, Barclay 4,000, BMO 4.2, and so forth. All right. So the one that give very high expectation is Goldman Sachs 4,003 by David Costin, and of course JP Morgan, all right, by Lacoste 4,004, and Herman. Okay, sorry, I don't pronounce this. All right, John, he's looking at 4,003. And UBS is about 4,250. So my point is this: when I see numbers so high, right, I always want to ask a question: is will they buy up to that number? Well, they will likely later on, but at this moment now, I will say that, right, the market may want to take some profit first so that you can have a good value to buy for the longer term. Okay, so again, guys, don't say everything I talk about the bear market. Today I showed you the bull market and the expectation. These are the targets. If you believe that it will happen, then of course, go with it. But very clear is that none of them is looking at the market to sell off. That's something on inform you. Now, do note what happened is that the last time when this happened, right, it was here. The last time we saw the 15 analysts were talking was somewhere around here. Yeah, and they were talking about the S&P will go to 4,000 and stuff. And at that time, a lot of people basically got into this and buy into the market, and that was before the thing happened, the COVID-19. But of course, some say that it's just coincidence. The COVID-19 happened. That's why. But if you look into history and look into the articles, you know that, right? Some countries are on quote who already know that this COVID-19 was ongoing, but they just play by the year. And of course, by the time it hits the market, they already did some what they call preparation for this. Okay. Now the thing is that yesterday, the 10-year yield was 1.692%, dropped by a little bit off the high 1.75, and the US dollar was 91.77. Now, yesterday after the MAO, I tell you guys that the dollar will be going up, and straight away people ask me, why you know the dollar is going up? Is that because of technical? I say no, it's fundamental, because whatever Yellen have said, or just Powell has said, right, it's very clear that the dollar will have to rise. So what happened is that yesterday the treasury yields as of this morning continue to slide. Now it's 1.61. But wait a minute, didn't you see that usually when the dollar increase, right, the yield also go up? So the thing is that what we saw, the yield actually came off yesterday until this morning, right? So we expect the dollar to fall. No, the dollar went up. The dollar actually strengthened by its own to 92.34. So that means that, right, the 10-year yields did not follow the US dollar. So that's why I tell you guys, don't read into too much of this sort of relationship thingy. The market can manipulate things and make it as if that they are related. Then you jump into it. Then after they just decouple it. That is where you get the root awakening. So that's why, guys, don't read too much into this thing here. No, it's good to let you know the macro view, but in terms of day-to-day trading, right, don't just look at the 10-year yields or the dollar to trade. If not, it's all right, you're going to get yourself into trouble. Okay, but what does it interpret? Well, I can just tell you very simply, this is very clear. It's outright manipulation, and obviously why are you doing that? Because they are talking, right? J.Powell, they are talking, Yellen is talking, so of course the market had to give a little bit face to make sure that, right, you know, whatever they say really makes sense. And then this is what happened. But you see, the global market is not stupid, especially the dollar index. Dollar index, you cannot manipulate because it's a whole world thingy. So hence, therefore, right, when the dollars have to go up, right, we know that the rest of the country is having problem. And this is not a good sign. So of course, when the dollar goes up, you can expect that the gold price to come down. And I've been telling you this, expect as much as people are calling for buying gold to 1750, 60, 70, 80, right? I'm quite bearish in gold. And if the dollar going up, it even make it worse. Okay, so I hope that you guys had caught wind of what I share, and of course made the right decision with your gold trading. Okay, so that is the US market. Okay, so now for the news wise itself, right, Powell is saying that, right, the US economy is much improved. Boeing seems to be a good time to buy, and Intel leaves chip stocks, and of course GME stocks, you know, basically has a very strong rally, but earnings came out was not good. That's why the share price came off. And after Janet Yellen and J.Powell testify, right, apparently there is some profit taking now. So the news is pretty mixed, and you know, pretty mixed in the market. But end of the day, we just have to follow rules. All right. Okay, so I know that Hang Seng is going to open soon, but don't worry, we still have time. Now, this is what happened on yesterday's market. The market opens above pivot 1 and OP. So by right, with the KSI green in color is supposed to be a buy, but the market must stay above OP. If the market don't stay above OP, no matter how, it will be a sell. So hence, therefore, right, you should sell the market. And if the market bridges the pivot 1, you can sell further. But because the KSI is green in color, you must consider the buyback position at all the KTR -1, -2, -3. So that is a very important thing that you must do when you see things like that. And of course, you can see the market really came off all the way. All right, once it hit the pivot level, it stabilized there. But because it never goes above OP, right, you cannot buy into the market. It didn't go above OP, you cannot buy. And of course, when the market breaks below the pivot 1, and also it basically broke below my intraday TSCB, the Dow Jones came down all the way to KTR -3. That's where we expected, and that was where it rebounded a little bit. So what do we expect for today's market right now? We will show you very soon. Right now, let's go into the technical side of today's market. Now, hold on a minute. Okay, the Hang Seng will open soon, so we just do a bit Hang Seng first right now. Hold on a minute, this is not, okay. There we go. Now, Hang Seng yesterday, once it opened, right, straight away, it sold down pretty strongly. And once it broke the MLP, you can see that the market really come down all the way. So the MLP is a very good indication to inform you the direction of the day. So for today's MLP, will be somewhere around here, about 28,780. That will be the MLP. The MA30 itself, right, is a bit higher at 29,208 level. Okay, so I'm going to write it down for you. All right, the market's about starting soon. Okay, never mind. Let me just get this up ASAP. Okay, so MLP is about 28,000. 780 level for today. Okay, so traders watch out for that. Okay, so with the chart look at it itself, right, it looks like more likely chance the Hang Seng will drop a little bit more today, a little bit more. All right, so let's stand by for Hang Seng this morning. Hang Seng is going to start off pretty soon in about 12 seconds time. Okay, so stand by, guys. Now Hang Seng yesterday hit the TSCB level perfectly at 28,316. Right, I told you go to our 300 series, it really went there, and after it hits there, it rebounded from there itself in power. Okay, Hang Seng has opened, it has gapped down to 28,370 as opening price, but immediately the buying came in. So now for Hang Seng, take a look now. Hang Seng now is trading above OP and seem to be there's some buying interest in the moment. And because it's above pivot one, right? So above OP, it'll be a buy up in the market. But because the KSI is actually a red in color, so if Hang Seng go to KTR +1 to +3, then look out for potential CCYR. You can look for sell signal. All right. Now Hang Seng basically is holding itself now strongly above the opening mark. All right, so likely we will see how it goes from here. But if I will say up front first, do watch out for the pivot one and my TSCB is very near one another. So if the market bridges the pivot one and the TSCB at 28,316, I believe that the Hang Seng will drop down to all the way to 28,222 level. Okay, I say this up front once again. If the market bridges the pivot one, which is 28,335, there is a high possibility that the Hang Seng will go down all the way towards the KCB level, the KCB level, which is here. That is 28,222. Now, if it really goes crazy and there's some bad news coming in on the US market, then the next level, the Hang Seng can be going down is 28,000 itself, because the KSI is red. It is very possible. Okay, so traders, watch out for this. These are the numbers watch out for. 28335 the support, 28222 the first target, and 28003 will be the second target for today. All right, hope you guys will be able to capture this run and profit from the market. Okay, all right, cool. All right, so let's see later on. You guys, I know you guys will be trading the Hang Seng and you guys will be updating me. Then we will see how it go from there. End of the day, remember this, all the technical level, you just have to take note of that. Okay. Okay. All right. Oh, my phone again full of messages already. Okay, you guys know what to do. Okay, cool. All right, continue. All right, so we have done the recap on what happened to the Dow Jones, and mainly you can see that yesterday was a pretty tough market, right? The market basically did consolidating around here with a zebra formation, but the problem is that it's below OP. Now, when it's below OP, right, you can't really buy into the market with confidence. And of course, you can say that, but Kel, there is the zebra, there's a BNB to buy, no wrong, right? Yeah, to buy is still all right. Just let you know it's not that strong, but fortunately the market goes up. But the market can't even go to the OP level and pull back. That's why the market already tell you the market is no strength, because OP is a minimum upside. And the KSI on the day chart is green. So if the KSI is green in day chart and yet the market cannot touch OP, right, that means that the selling wave is on the way. And indeed, you can see the market really come off in the later part of the day. Okay, so these are all the telltale signs that traders you need to watch out for. Okay, so that is done. So let's just look through the entire chart right now. We go back into the Dow Jones. We start from the very beginning. Okay, so now this is the Dow Jones chart, my long-term trend line, and you can see that it seems to be performing beautifully right now. And you can see that yesterday the Dow purposely touched the blue trend line and pulled back, right? Just to confirm, this is the high. Okay, it's not a BNB, so it's still a downtrend. It's still a downtrend. Now the MA30 is very close by. So I'm going to say this upfront first. For those people want to buy into the Dow Jones, watch out for 32,205, because that is the MA30. And the last time when this happened, the market recovered pretty strongly. All right. So whenever the market stays above the MA30, there always be a strong rebound. So is this going to be like this and go rebound again? It is possible. So traders stand by at 32,205 level. Okay. So traders stand by, traders. Now for the MA200 is somewhere at 30,000, and that is the level that I think that the market might be going if there's going to be any knee-jerk effect, 30,000. Okay, so I write it down first for you. All right, now it's a bit higher now, 30,100. So if ever the Dow Jones is going to come down and breach below the MA30 instead and doesn't recover, then there is a possibility that the Dow may come down all the way to MA200 just to basically tap the down uptrend and continue to go up. So if the market comes out of MA200, I suspect that there will be some strong buying, and that will be a good time for traders to probably cover back some short position if you are shorting, and then buy and turn long. But if the market breaches the MA200 level, then this can get pretty drastic. All right, things can get pretty drastic though. If that happens itself, we will do a session on this and inform you what is the next potential level the Dow can go. But at the moment now, I think for now, status quo, just look for potential buy at MA30 first. If it happens, that'll be a pretty expected one. Okay, cool. All right, so that is the Dow Jones on the long-term chart. Okay, let's look at the rest of the longer term movement. Apparently, this is the thing here. I want to explain this to you guys. Now, the thing is that this is the all-time high at 33,234, and then the middle here, the next level is 31,572, right? That is the next 5% level, right? So very simple mathematics itself, right? Very simple mathematics. You take these two level, which is 33,234, 33,234 plus the 5% level. Next one is 31,572, 31,572. Then after that, you basically get the full sum. You divide by 2, you get a figure, and that's 32,400. So guys, apparently it's out now. I'll inform you, this is point A, this is point B, right? The midpoint of them is 32,403, which is now very nearby to where we are. That's why probably that's now why the Dow Jones went to 32,406. The market rebounded already. So if today there's any anticlimax basically or going down further, then of course the market has to breach below 32,403, then the market can go down lower. Okay, if not, it's all right. The first so-called technical mathematics support is at 32,403 level. Got it? All right, so traders, this is something that you can watch out for. This is the AB, this is the midpoint here itself. Okay, so I hope you got my point. All right, Hang Seng seems to be trading a little bit lower right now. Let's just jump back to Hang Seng again. Now, Hang Seng is trading a little bit lower now. Let's go to the 5-minute chart to see the Hang Seng. Indeed, the Hang Seng opened up, right? It came down, it went up first, then it pulls back now. It's now basically trading below my TSCB level from the 5-minute chart. So I believe that if Hang Seng is to come down later on, there will be the first TA point, and that's 28,279. Because that is the KTR minus 2. 28,222 is a KCB level. So that is another thing on its own. Okay, traders, so stand by for that. Okay, huh? Okay, so let's continue the Dow. The Dow weekly chart, not that nice. The weekly chart now is trading below the opening price of the week. And of course, if this one continue to go down further, then obviously there might be a little bit pullback. Because the last time whenever you see that the second week, okay, there's something that I want to just bring it again to you as warning. Okay, you take a look, right? When the market is down for 2 weeks in a row, okay, like this one here, the market actually go down further. Can you see that? Okay, so we just continue to do this. It has to be 2 black candles in a row. So you see that in the 2 black candles in a row, the next week the market plunged quite badly on this term back in October, right? So the same thing is 2 black bar, the market came down quite a fair bit. All right, this one 2 black bar, but the market went up. Only this one went against it. Okay, right after that, this one there was some selling initial after that. So all I can say is that it's not 100%, but if let's say now we're seeing 2 black bar, there is a small possibility the market may purposely go down to 31,500, which is the level that I mentioned to you, the 5% level from the all-time high level. Okay, so this one is something to watch out for. So traders, you can actually take note of this particular chart. Okay, so I'm just informing you what I'm seeing as a trader, and whether or not will it work, that is another thing on its own. Okay, all right, Cool, huh? Okay, so that is the weekly chart, and of course my daily chart, my special chart is still ongoing. So let's look at today's Dow Jones right now to look at the whole movement for today. Okay, so for Dow Jones this morning, all right, let's just go through the motion. Now the opening price this morning is between the two pivot above, is between the pivot 1 and pivot 2. So the KSI is still green in color. So the market is still on the buy side. Yes, indeed. Yeah, that's why it's some resilient on downside. So if the market stays above OP, the market should be able to touch the 32,510. That is a level that I believe the Dow will go up if the market stays above OP. But if the market generally goes down and stay below OP, then now the first level you'll be going for will be 32,378 because that is the first KCB level. If the market really breached below the KCB level, then there's a slight chance you go to 32,205, which incidentally is all right. It's a level that I mentioned earlier. So traders just have to watch the Dow closely, but I repeat, the KSI is green in color. Hence, therefore, right, the downside will be limited. The downside will be limited. Okay, this is something that you must be clear on that. I repeat myself already. Okay. All right, so that is the Dow Jones for you this morning. And of course, let's look at the Nasdaq, a quick one. Nasdaq has been trying to stay above, and the yields coming off is all right. It makes sense that the Nasdaq to recover, and it's happening right now. The Nasdaq is hovering beautifully at the 50% mark level, right? This is the Fibonacci from the high to the low. I did the Fibonacci. We can see that the market is basically hovering at the 61.8, and now it's basically supported at the 50% mark. So as long as the market stays firm, it should be okay. Now for today's MLP, is somewhere around here, which is that at the 50% mark at 13,060. So as long as the Nasdaq stays above the 13,060, fine, no problem. But if the Nasdaq goes below it or the yields have to climb up on its own, that is where the problem. Now, I don't expect the yield to climb today. I expect the yield to climb tomorrow onwards. Okay, so that's why you understand my point, because tonight there's still got a little bit of sharing, okay, by some people. Okay, so that is the Nasdaq, and okay, so let's bring the Nasdaq Day Chart, quick one. The Nasdaq today opening price is actually below the below pivot 2. So that is not a very good sign, but because it's opening near the pivot 2 and now it's trading up, that's why it's going up to test the pivot 2 level, which is testing it right now. But if the market fail and pull back below OP, then that will be a classical CCYR sell. Why? Because if you notice this, the KSI is also red in color. So with the KSI red in color and the market is below pivot 2 and below OP, there will be some selling in the market. So for Nasdaq for today, I suspect that there will be some selling on Nasdaq if it goes below OP. So traders who are looking for a good trade, watch out for Nasdaq. Then of course on the high side, on the reference side, if you do see the yields climbing up a bit, then you have the overall package. But of course, it doesn't mean that the yield doesn't go up. You cannot short the Nasdaq based on rules. Okay, based on rules, you can still short the Nasdaq when the rules apply. Okay, this is very, very important. Now, people ask me about DAX. I told you guys, DAX seemingly is resisted at the resistance point I mentioned. And yesterday, DAX created a BMB. Now, DAX created a BMB, so which means that, right, DAX today will have to watch. If the DAX cannot stay above the BMB RL, there might be some profit taking on the DAX. The MA30 is nearby, and that's 14,350 level. So shall the market pull back itself? That's about 300 points down to the MA30, 300 points for the market. Okay, so that is the DAX that we are looking at. Okay. All right, so let's look at gold yesterday. Now, gold yesterday, okay, it was going up, and basically it was basically killing us. Because yesterday pivot, there's no pivot on gold, right? And gold was just basically taking its time to go up. It was very difficult to trade. It was only later part in the afternoon where it let loose, and wow, it came down so fast. I mean, it was pretty heartbroken because we were short in the market, right? And we were stopped out by this guy. They purposely stopped us out and then came for the selling. I mean, on hindsight itself, right, we could have short, but because the rule, although have CCYR, but there was no clear short, no BNB, that's why we didn't really trade. It's okay. I mean, of course, we feel painful that we lost some money, but the money can be earned back. I'm very sure of that. So on the financial news now, right? Apparently, gold sleep as stronger dollar prevails. That's what I said earlier. Indeed, if the dollar continue to go higher, the gold price will have some downside. Okay, and of course, Wall Street is also happy. Then obviously, we also have the gold coming off a little bit. So let's study what happened yesterday on gold. Okay, gold yesterday got no pivot, so the opening price will be the main driver. Now, obviously, with the KSI green, we were all expecting the gold price to go higher. This is something undisputed. Okay, all right. So, but the thing is this: but once the market basically stays below OP, we know that we follow the rule below OP, then it will be a sell because there's no pivot. So it's very clear that below OP, CCYR, we will sell. But because the KSI is green, that's why we will not sell too much, and our expectation had to be kept pretty, what do you call, within expectation, or as meaning practical here. So what happened is this for gold. Initially, it came down with a very beautiful BNB with a color change. So CCYR is a sell. It was a good sell. So we made money the first wave. Then after that, it stabilized at KTR -1. Exactly what I told you, was KSI is green. That's why the market stabilizes and recovers. But once it goes out to OP, it starts to stay at the OP for quite a while, you see, for quite a while. Then after that, a single yellow came in, but it's not a trigger point. The market broke below the OP and the gold collapsed down. It was so painful. But what is incredible is they look at it. KTR -2 is a level at 1724. Look at the way the gold stopped there beautifully. It's as if that the gold knows that 1724 is a very important technical point to watch out for. And apparently the market really bottomed out at the KTR -2 level. Really a pretty perfect system in my opinion. So all you do is just follow, wait for your opportunity to trade, and that it is, okay? Of course, it will be better to shoot a shot earlier, but too bad luck. We have no clear shot other than the color change. No BNB actually. It's pretty sad though. Okay, got the idea now for gold? Okay, so you get the idea on gold right now, right? Let's look at the today's gold forecast. Now, today gold forecast basically is not that nice. Apparently, I'll be upfront with you. First of all, the MA today is at 1735, so it's not very good. Now, yesterday, look at it. Yesterday, the MLP, the day before MLP, right? You look at the gold touched the MLP and straight away it came back down. So that's why I tell you the MLP for gold is really, really powerful. You really must use it. So now you look at the midpoint of gold, the MLP for gold today is about 1732. So now two numbers to watch out for today. The resistance level, the MLP, is 1732. Now, dear all, I'm not drawing to scale, which means that I'm just basically giving you a rough estimate. All right, I don't have time to key in the numbers. So sometimes you'll say, how your MLP and mine is different. I'm just not drawn to scale. So you have to do your own real calculation to get the best number. Okay, I'm just giving you a ballpark figure. I'm just drawing with estimate. So the two numbers that today we're looking out for is about 1732 to 1735, because 1735 is MA30, 1732 is MLP. So as long as the market stays below the both numbers, right, there might be still further selling. And the selling number that I'm watching still is 1719. Why is that so? Because 1719 happened to be the BNB level. All right. So this is just pure conventional, not using our TWB system yet. So 1719 should be the technical level that the gold will be going down today as a first target. And of course, will it be going lower? It is possible. Why do I say that? Let me explain this to you. Let me bring the chart to you guys. Now, this is the weekly chart, basically showing you the momentum. Now, basically, look at it. The last time we see something of sort, let me just draw for you guys. Now, whenever there is a engulfing movement means that, okay, I try to make the colors a little bit different. Hold on. Okay. Engulfing movement means that, right, if the black candle covers the white candle in front, this is a weekly chart, usually there is more selling to come, all right? So that's called engulfing, okay? Can you see that? Okay, all right. So the thing is that when you engulf itself, right, the selling continues. So are we going to see engulfing soon? Yes, indeed. So if the gold get engulfed this week, that means next week there will be some selling in gold. And that is whereby I'm warning you traders to be very careful on gold holding over this weekend to next week. Because if the gold really engulf, then gold should be again going towards the possibility of gold going down towards the 1689 level is very possible. All right, I repeat, if gold goes down, the chance of gold going down to 1689 is very possible. So this time around, if the gold hit 1689, it could be a good time to buy for a rebound, because we saw the gold rebounding to 1740, right? That's a very good $50 gain. So will thing repeat itself, right? We won't know. We let the market decide. Okay, at least you know that you are given the direction. Okay. Now for silver, I told you guys to avoid silver, and yesterday silver broke below the MA 200. It broke the 25.48 and went down all the way lower. I told you guys silver will go down to 24.80, and it seems to be possibly happening in the near future, right? 24.80 is the level that I believe the silver price will go down, and it seems like it's going to be going down soon to this particular level. And I told you guys silver is actually a sell, and you look at it, it really came down. So for people who chased silver back then, I told you not to buy. I know that this silver ratio thingy, but you see now everybody kept quiet already. Everybody says, those who say that silver will be a good buy has all basically disappeared. So that is the reason why you must have reliable trainers and coach to follow up with you. When we are wrong, we tell you we are wrong. But when we are right, that is what we want you to write with it. So that is a very important thing. You need to have the right environment to help you guys. If not, you just basically go for what you see on internet, be sold by their colorful illustration and so-called probably fake statements. And then that is where you get yourself into serious trouble. All right. So silver, wait, don't buy first. Okay. You heard me loud and clear. Silver at this moment now, don't buy first. Okay. Right. So with that, we look at the gold market for today. All right, this is gold for today. Now, today's gold, this is something interesting for gold. Gold opening price is between the two pivots. So naturally, with the KSI green in color, we should be looking for upside. So if gold stays above OP, it may tend to go up to 1739 again. Now, this is TWB system. We follow by the TW method. So as long as the market stays above OP, we just stick to the buy on the gold first, okay? But if the gold do come down below OP, which we kind of suspected it will happen later today, then gold will come down all the way to 1721. That is a pivot 2 level. Now gold, there are a few KCB, 1726 and 1722, all right? Those are the level to watch out for. But the 1715 is the third KCB level, but in between them, 1717 happened to be the TSCB level. So there's a bit of a few range over there, and I suspect the market may be drawn towards there, and then maybe form a base over there. So we'll give you more update later, but at the moment now, no blue bar at the bottom, meaning that the market overall is still pretty bullish at this moment, even though it's coming down, right? But the buyer is still there. So the thing I'm going to say is this: if everybody is looking to buy along this period, and if the market failed to go up, right, then usually this will bring down to a 1x1 method, which means that the market will come down by another similar wave of downside. That means that the gold should be coming down to about 1689 in the longer term. Okay, I'm just saying this for a long shot here. I'm saying that, right, if the gold keep on having buyer interest, but the market still cannot go up, right, then based on the consolidation, that 1x1 downwards, then the gold may come down to 1689, and the probability of that happening is actually pretty high. Okay, so that is my personal view on gold in the long term. Okay, of course, my view may be wrong, so let the market decide. Okay, if not, just trade the day to day, you should be fine. All right, so this is gold trading. All right, so we have done on gold. So let's look at our Bitcoin, shall we? Bitcoin. Okay, there's a request. They want me to look at China A50. Okay, I'll do a quick one on China A50 right now. Now, China A50 today, it has gap down and now it's recovering. So that's why probably Hang Seng will probably recover a little bit. Okay, and you can see that China A50 is trying its best to go up above the MA 200. Now, yesterday, the China A50 closed below the MA 200. That's why there was some selling by gap down. But now it seems that there's some buying interest again. So, of course, that is good if you try to go above the MA 200. But if let's say later on, because of whatever reason, it trail back and close below the opening price, then selling will be quite detrimental, all right? So if you ask me where is the next level for China A50, right, and my personal take is this: it should be coming down to somewhere around, around here, right? Which means that it will be, there's a reason why the market recover. All right, so 16,880 will be the level that I believe the China stock market will come down to that particular price again later. So that level is 16,880. Okay, that is the level that I suspect the market will be going there. Okay, so pull back to this point here. China A50, yeah? Okay, all right. So that is the China A50, and we look at the Bitcoin at the moment now. Now, Bitcoin yesterday we have a reasonable day. Bitcoin basically gave us 3 wins out of 5 trades. All right. So first 2 trades didn't go out well. The next 3 trades did very well for us. And of course, yesterday we also had traded live, and we made about $77. Okay. So this is trading a 20K account, live account, but just that, right, 20K sync. But just that we take our risk very, very small. Our every trade, right, we only risk $100 to $120. Yeah. So that's why end of the day itself, you can see that trading Bitcoin, even though the Bitcoin came off, right, as long as you stay on the long side and you look for the signal to enter, overall, you can still make money. You can see that. Okay. Oops, sorry. All right. So that is what happened on the Bitcoin yesterday. All right. So for Bitcoin today, let's do a quick one on Bitcoin right now. Now, Bitcoin today is between the two OP, between the pivot level. OP is here. So for Bitcoin, right, for Bitcoin, if it goes above OP, it should be able to test back the pivot 1 level. But the downside is the KSI is pretty red. So the downside pressure is actually happening for Bitcoin. Just like the buying interest is still there. So if Bitcoin stay below OP, right, there's a high chance that the Bitcoin may test the 85% level, and that is 52,377 level. That is a possibility for Bitcoin to come back down to this point here today. All right. So this one, traders just stand by. But if it comes down, right, then there'll be a pretty good time to look for buying interest. Okay, that is the 85% level from the all-time high here itself. Okay, 85. Now the next level is 50,000. That will be the 80% level for Bitcoin. All right, so I come to the end for today's morning MAO part 1. So if you guys want to continue with me to hear all the alternative market analysis, which is more to the bear side of the market, then you stay on, right? If not itself, right, we take a quick 10 minutes break right here for those who to take their leave while I get my medicine. Thank you for all the love. All right. It's fun for Facebook to have this all the love thing, the love and the thumbs up. Okay, all right. So let's continue to this morning MAO second part. Now, obviously, with the Federal Reserve pumping so much money and the stock market going up so much, right? So obviously, the rich got richer lah. So I covered this yesterday. Today is more in depth. So basically, in short itself, right? The rich got even richer by 35.2% in just a single year itself. So basically, all the money that Federal Reserve or the Treasury comes in, the money, right, all went to this top 1%. And the bottom 50%, right, just share the 4.1% increment. So you can understand that the top side get all the loaf of bread, the bottom get all the crumbs. Okay. So obviously, yesterday, Bernie Sanders came in, today, March the 19th, Bernie Sanders came in and say, we are in a moment in American history where 2 guys, Elon Musk and Jeff Bezos, own more wealth than the bottom 40% of the people. So two person own more money than the 40% at the bottom. So this level of greed and equality is not only immoral, it's unsustainable. I think that is pretty clear. We all understand that. But of course, you will never get to hear from J.Powell. That's very clear. But it's really not the fault of Bezos and Elon Musk, right? They are just proper businessmen, right? It's just that the way the stock market is being created and the way US is distributing the money, that is the problem. So the thing is this, right? Okay. There was this interview on March 17th. I want to bring it to you. This is a very interesting, a very good sharing here itself. That Jerome Powell have spoken. Give me a moment. I can't find. Let me find that particular article. Hey, sorry. Yeah. Oh, did I close it accidentally? Oh, gosh, shit. Okay, wait a minute. Oh gosh, I think I accidentally closed it. I will show it to you tomorrow instead. But just basically, Jerome Powell was being asked, so what do you do? Do you really print money? And he was very candid. He said, yes, we print money. He didn't really bet an eyelid. He just said, that, yeah, we print money and we use it to save the economy. So it's a very, all I can say is this, yeah, you know what you did wrong, but you know, did wrong. What you know you're done, but you know that it's like you're telling yourself that it's part of it. It's nothing to be worried about. Okay, so basically it's all right. They're telling you that as long as the Federal Reserve is there, no one to be afraid of. So of course, Fed can fight inflation. We know that, and they say that they have all the tools prepared. So apparently, right, this is something that I want to take a look. It's a very interesting thing. Watch this carefully. Now, this guy Scott Minner, all right, he says that the bond market has had difficulty sustaining rates or at the current neutral rate projection, and we see no reason to expect a different result this time. Okay, the sell-off has largely run its course. So what you're saying that, right, he's saying that, right, the selling may actually finish. There could be a recovery soon, and that's what I mentioned to you. But if you look carefully, right, this is the FOMC projection on neutral rates. It's going down. You can see that. You also see that this is a market pricing on neutral rates, though it's basically climbing towards it. But the Fed fund rate is at the rock bottom here. It's at the rock bottom. So it's just a matter of time, right? They have to climb up to go together with it. And that is what I'm trying to say, that there's a two side of the coin of this. Some people think that it's too low for the bond market, so a recovery is intermediate. But some people say that no, there'll be more downside to go. So that is what I'm trying to say. And of course, to give you extra stuff is Tesla, because I've been receiving a lot of messages asking me, can we buy Tesla? Well, basically, my friends, look at the chart here itself. Now, based on the KSI, you can see that the buying has been relentless. The buying has been relentless on Tesla. So this is a period, right, that Tesla been trying to buy. So by right itself, right, if this consolidation continue, then the upside consolidation, the Tesla share may go up to about $820. Okay, we're talking about consolidation, box for box. But on the downside, if it happens, right, actually Tesla can come down to worse than the recent low. That means that, right, there is a possibility that Tesla, if it goes down, it may go down all the way back down to the last low here itself, and that is about 540 level. So upside, I find it a little bit difficult. Downside, a little bit easier. So my point is this: I believe Tesla should be going down to 540. I know that means that Cathy Wood thinking will be wrong, right? But of course, this is my personal take if you ask me, because I've been receiving messages on this. So I might as well tell you my personal take on Tesla. Okay. Now, of course, in the fundamental side itself, right, ARK Investment came in and said that, right, they are able to forecast, and they did a lot of this research. They used 40,000 simulation, a Monte Carlo model. Okay, short Monte Carlo is like gambling, right? Isn't it? Okay, anyway, I can be wrong. Okay, apology. So anyway, 40,000 possible simulation. Wow. I mean, I only had one simulation, and that's what you just saw. Okay, so maybe the others is better. Okay, but they say that, right, because of that, they expect the Tesla share in the next 4 years to go to $3,000 or 5 times. Wow, 5 times. You know, 5 times is a lot, right? 5 times is a lot. So of course, the question is, will it really happen? I don't know. Really, I really don't know will it happen. So seriously, it's all right. I will not want to say, I won't want to judge this. All I can say is that, right, if really Tesla can go to this $3,000, wow, ARK Investment can make a lot of money. That's first thing first. And more important thing is that ARK Investment is all the investors will be so rich, okay? But there's something that I want you to take note. In our last valuation model, ARK assumed that Tesla had a 30% chance of delivering fully autonomous driving in 5 years ended 2024. Now, I don't know about you. Basically, it's right. You're talking about fully autonomous driving by end of 2024. Now we are at 2021. We are 3 years away. In your opinion, if you're still around with me, do you think that we can go into fully autonomous driving? If you think yes, key the word auto, AUTO. If you think that, if you say no, just key the word no. I want to ask you guys what you think about this first before I give you my answer. 2024, 3 years later, we will go into fully autonomous driving. Wow. Okay, wow. This is my point. It's wow. So guys, if you're online now, right, stay with me. What is your answer? Do you think that we go to full autonomous, meaning, right, no more driver already? Basically, you know, you just go onto the car and the car will just send you to wherever you go, like the Flintstone thingy itself. All right, do you think it's happening? So Colin say no, Patience say no, Richard say possible, Jerry say no, Arun say won't happen. Okay, Anthony say no, Carl say too soon. Okay, all right. Okay, now basically I did some research. I can tell you the answer at least 10 years from today. At least 10 years from today. Yes, at least. That means, all right, for the possibility of that is all right, the infrastructure must be there. And of course, the people, the culture of the people has to be there. Now, also the right of the people. Now, look at it now in Singapore, especially so many Grab drivers, okay, they are really living on this. If this go to autonomous, right, I tell you the first thing, there'll be a strike coming in itself, right? And this time now, I don't think they are wrong this time compared to the SIA time. Okay, so I really don't think so. And now the thing is that the last time that model that they had was based on 30% and the market bought into that already. So now they're telling you that's a 50% now in 2025, upgrade by 1 year. Oh my God, I don't know lah. I think that I feel very aspirated when I see this. I say that sometime in life, if you want to lie, also, you know, don't lie to that point. But of course, I can be wrong. Who knows? The next 3 years, maybe alien come to the world and then we create this special driving. You know, I don't buy that lah. Seriously, that is my point. When I went through the ARC, the whole thing, I went through it and I don't buy it. Really, I don't buy it. Okay. All right, so before we go today, just one more time, I need you guys to really do me a support. Join this coming event. Support us, okay? Support Winston, support Yao Tong. All right, let's just do it together. Right, just go to tradewiththeboys.online and sign up, okay? Well, that will be all for today. Thank you so much once again online, guys. I hope you guys appreciate today's sharing. I hope you win money today. And of course, today's Wednesday. I think the meeting is still ongoing, right? Yellen and this Bernanke and Powell will be still talking. So the market will be again turbulence. Right? You saw turbulence down, right? Maybe after tomorrow, after today, then the market will be much more directional. Okay. So guys, thank you so much for participating today. I hope you enjoyed this. All right. Wow. Colin said 20 years. Okay. Let's see. I don't know. All right. My friends tell me that it's really not so fast. That's for sure. Okay. Take care. Have a great day. Bye-bye.